Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, January 27th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily chart of the ES. You'll notice here that the ES continues to trend up overall, but has had an outside day develop over the last session, and then now opening with a gap down and pushing downward. So we have a two-day pullback here that has developed. Now, is this going to be about as far as we pull back? Are we going to end the day with a huge day back higher and close above the previous session's close? Or are we going to continue significantly lower? So again, it's very difficult to tell the severity of the pullback here and how far we'll go sometimes. But what you've seen here is that ever since you've had this pullback that's come across this line, the market has really pulled back in a modest way each and every time, even this last time here. These have been very measured pullbacks of a certain degree for the most part. If you measure from the tip back, then maybe that was a little bit more. But in terms of the near-term pullback, the 1 to 2 to 3 or 4 day pullback, it's been about this size. Now, where this thing really breaks down, because again, we could easily start to see this thing develop a rejection down here. At the moment, there's an absorption signature developing here on the intraday time frame with 3240 to 3242 half being the absorption zone where bulls are trying to defend. Now, if price were to close above today's midpoint and back above the previous month's high, perhaps closing back above 3275, that would be tremendously bullish, right? And that could suggest another push higher. Where this thing breaks down is a failure to hold that previous month's close, because that would suggest perhaps a drop into the midpoint of the previous month, or at least to retest the current month's low. So if it can't hold the previous month's close here, that's where it opens up a bit more downside, and it could get more significant from there. A retest and rejection of that low could bounce this thing right back up though. Alright, let's take a look here at the NQ. You'll see with the NQ very similar price action. Again, if you go along this line here, we've had very clear pullbacks that have been about a certain degree, right? And so again, that's very similar to what we're seeing now, and something we talked about last week, that if we pull back and we're at the top of this channel, we may pull back and come into this LVN, and then that could be a great buying opportunity for a continuation higher. At the moment, we've had a pretty significant intraday rejection at that LVN at around 5 a.m. Central this morning. Again, very similar to the ES, we're seeing an absorption signature develop on the intraday time frame from 89.60 to 89.70. If they can hold that zone, there could be a bounce in the making. So this is going to be something to keep an eye on. Again, very similar to the ES. If it can't hold this key zone right there, that LVN, we start to mark lower to the next key levels below. So that's going to be something to keep an eye on. All right, let's take a look now at crude oil. You'll see here with crude oil, we've been talking about how bearish crude has been for a while. From a 65, 66 rejection here, we had a major day down. This was about as big a day as we've seen in 5 or 10 years. And again, breaking below 60 here suggested we would likely continue downward. We knew a bounce back towards 60 could be a sell for continuation down, and we talked about price getting to the 50 to 52 zone. That's a very long-term target, and 54 being the next target down. So we hit 54 on Friday, and now we're breaking down, getting very, very close to those 52s here so far today. Again, you can see recent support down here, and anytime price has gotten below 52, it has been a rejection in the weighting. So if you look back over the course of the last year here, very clear support comes in at around 51.20. And so if you start to get a little bit lower below 52 here, you start to see these tails develop, and that could lead to a nice rejection again. So this is the zone where we'll be watching for signs of rejection. I mentioned before, anywhere between 50 and 52 could be a great target, and then perhaps some sort of bounce could be seen from there. But right now, very, very bearish here, but coming into significant support. Lastly, taking a look at gold futures. You'll see with gold here, this one turned right back up. We talked about before the 10-day ADR was very compressed right here, and then we started to see a signal. I mentioned if we can start to break above 1565 to 1570, it opens up the next push higher, it also opens up a retest of the previous high. We mentioned before that we could see a big time move of somewhere between 80 and 100 handles of range, very similar to what we saw this last time. And even if we fall short of that right here, somewhere between 50 and 75 handles of range could be seen. So again, very nice breakout on the 10-day ADR. If I were to come down here and increase this again to 10 days here, that's 12, there you go. We'll actually get the measurement here. So right here, that's the quantification of the range. And then you can see again, if we were to reach R3, it'd be about 90 handles. So between 80 and 100 handles of range could be seen over the next 10 sessions or so. So right now, again, if it can hold above 1570, that's good. If this turns out to be a false breakout and we close back below 1570 or 1565, that would be significant and could suggest a retest of the low and 1525 down below. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.